Welcome back to Investing Talk Podcast. Today we're diving into a question we've seen popping up quite a bit. Is Civitas Resources a good time to buy now? We're going to really try and break down all the available data, the analysis we have, just to give you a clearer picture so you can make your own informed decision about this company. Now, before we really get into the weeds, please, if you haven't already, take a second to subscribe, maybe hit that like button, and definitely leave us a comment on this analysis. Your support, honestly, it's huge. It really helps us reach more people like you. And look, if you find this breakdown valuable, maybe consider buying us a coffee. Every little bit helps us keep doing this kind of work. Oh, and one more thing. If there's a particular company you want us to look into next time, just drop its name in the comments below. We genuinely read those and love getting your suggestions. Okay, let's get started. Let's look under the hood of Civitas Resources first. What's the core financial health telling us?
Right. So if we look at Civitas Resources' recent performance financially, the latest quarterly revenue, it came in at about $1.19 billion. Now, the important thing there is that's actually a decline. It's down about 10.17% compared to the same time last year.
Okay, 10%.
Yeah, which, right away flags some top-line pressure. In this sector, energy, that often points to things like maybe lower commodity prices or perhaps lower production volumes. Headwinds, basically.
Okay, a 10% revenue drop, that definitely gets your attention. Is that the whole picture, though? Or is there maybe something else going on with their finances? Like, how's their profitability holding up?
Well, that's where it gets quite interesting, actually. It shows a surprising bit of resilience because despite that revenue falling, their earnings per share, the EPS, it actually went up. And quite a bit, too, about 14.37% year over year. It hit Nordian 99.
Wow. Okay, so revenue down, but earnings up significantly.
Exactly. It's a strong countersignal, right? It suggests Civitas Resources has either gotten, much better at operational efficiency, or maybe they've really cracked down on costs. Or potentially there were some one-off things, like asset sales maybe, that boosted the bottom line. But whatever the reason, it implies they've got a decent handle on their internal economics, even when revenue is challenged from the outside.
That EPS gain is definitely a bright spot against the revenue. What about debt in cash flow? Are they carrying a lot of debt or do they have flexibility?
Yeah, that's a really crucial point, and unfortunately, it's an area where our source material was a bit thin. We don't have the specific hard numbers for debt and cash flow right here. Now, there were some references to debt maturities, and the feeling was that they were manageable. But, for a really precise assessment of their financial wiggle room, which is super important in a cyclical business like energy, you'd absolutely need to go look at their detailed financial reports.
Yeah, dig into the actual filings.
Exactly. Understand the leverage, the liquidity. Without those specifics, it's just, it's an important unknown for now.
Got it. And positioning-wise, within the energy sector, do they seem to have any specific edge, any competitive advantages that might explain that efficiency you mentioned?
Well, they're squarely in the energy and resource extraction game. That's clear. Our sources didn't explicitly call out things like, special technology or unique land rights, that sort of classic competitive advantage. But that ability to boost EPS while revenue is shrinking, that in itself could be a sign of an advantage. It hints at maybe better operational efficiency or maybe a lower cost structure than some of their peers.
So maybe they're just better at getting the resources out of the ground cheaply or managing expenses?
Could be. It suggests they can stay profitable when maybe others are finding it tougher.
Yeah.
So while it's not spelled out, that resilience, you could argue, is a kind of competitive strength.
Okay, so if you put all that fundamental stuff together, revenue pressure, but strong profit management, some unknowns on debt, what does this really mean for you, the potential investor, looking at these numbers?
It means you're looking at a company with a, let's say, fascinating, maybe slightly contradictory fundamental story. You see a business that seems pretty good at managing what it can control, its costs, its profitability, even when the market conditions are tough. That says something positive about management, right?
Yeah, definitely.
But then you have that gap in the data, the debt, the cash flow specifics. That's a key piece of the puzzle you'd need to actively track down yourself. So it's really about weighing that impressive internal discipline that we can see against some critical financial details that are, currently missing from this picture.
That's a really clear way to put it. Okay, let's shift gears then. How is the wider market seeing all this? What's the valuation story? What are analysts saying about Civitas Resources' worth?
Right, valuation. And this is where it gets really interesting. You see quite a range of opinions, actually. The average analyst price targets, they suggest, pretty significant upside from where the price was recently. It was trading around, what, $31.10 to $31.54 back in late July 2025.
Significant upside always catches the ear. What kind of range are we talking about for those targets? Are they all clustered together or is it all over the map?
Oh, it's definitely spread out. A remarkably wide range, actually,
Yeah,
which tells you a lot about how differently people are viewing this and, the general uncertainty in the energy sector. These price targets go from around, say, $42 on the lower end up to $87, maybe even higher
yeah.
within the next year or so looking into 2025.
Wow, $42 to $87 plus. That's a huge spread.
It is. It means you've got some analysts who are incredibly bullish. Maybe they're banking on a big energy price rebound, while others are, much more cautious, probably focusing more on the current challenges. It really highlights that the market just hasn't settled on one clear view of Civitas Resources' long-term value. It's
Yeah.
still very much up for debate.
And the company's market cap is around $2.87 billion. How does that fit in? Especially since, as you said, our sources didn't give us the usual valuation metrics like PE or PS ratios.
Yeah, the lack of those common ratios, price to earnings, price to sales, price to book, it does make direct comparisons a bit harder using just this data.
Yeah.
We can't easily see how it stacks up against its peers on those multiples.
Right.
However, a market cap of nearly $3 billion, combined with that $1.19 billion in revenue and the improving EPS we talked about, it might suggest sort of intuitively a moderate valuation. Not obviously cheap, not obviously expensive perhaps, but again, without those specific ratios to benchmark against others in the industry, it's really hard to say definitively if it's undervalued or overvalued. It's another piece you'd want more data on for a full analysis.
Okay. And what about things like discounted cash flow, DCF models? Any clues in the sources about how analysts might be arriving at those higher targets?
No, nothing explicit on DCF calculations in our sources, but the fact that those bullish price targets exist, especially the ones reaching up into the $80, that strongly implies that the analysts behind them are probably using pretty optimistic DCF models or other valuation methods. They must be projecting significant growth in future cash flows to justify those kinds of numbers.
Okay.
So it's like an implicit sign of confidence in future performance, at least from the bulls.
Okay, so this really wide range of analyst views, from $42 to over $87, I can feel a bit, well, confusing if you're trying to decide what to do. How do you make sense of that kind of divergence for your own investment approach?
That's a great question. It really gets to the heart of investing, doesn't it? When you see experts disagreeing so widely, it's a signal. It tells you the market hasn't formed a strong consensus. So for you, it means you really need to think about the assumptions driving those forecasts. Which scenario feels more plausible to you?
Right. Do you believe the optimistic case for energy prices or the more cautious one?
Exactly. Are you leaning towards the analysts expecting a big sector rebound? Or are you more aligned with those worried about volatility? It forces you to develop your own conviction. You have to weigh the different possibilities, maybe look for an entry point that makes sense even if only the more conservative forecasts pan out. Find a risk-reward balance you're comfortable with.
Finding your own conviction. That's key. Okay, let's pivot now to the technical side. What's the recent price action telling us? How has the stock actually been moving?
Well, looking very recently, like around July 25th, 2025, the price was about $31.10. There was a small dip on the last trading day, down about 1.3%. And after hours trading was slightly lower still, around $30.95.
Okay, so a little bit of downward pressure in the very short term.
Yeah, just a hint of negative momentum, maybe some selling pressure right at that moment.
Did we get any more detailed technical indicators, things like moving averages, RSI, MAD, stuff that might give a clearer trend picture?
No, unfortunately not. Our source material didn't include those specific technical indicators. So things like moving averages to see the trend, RSI for overbought, oversold levels, or MACD for momentum shifts. None of that was readily available in what we looked at.
Oh, okay.
And that makes it, pretty difficult to get a clear read on the short-term or even medium-term technical picture just from this data. You can't easily spot support or resistance levels.
So anyone relying purely on technicals would need to do their own charting work.
Absolutely. They'd need to dig much deeper into the charts than what we have here.
So it sounds like the short-term technical view is a bit, well, hazy without more data. But what about longer term? Any hints from a technical standpoint there?
Well, indirectly, perhaps, while the immediate technical signals are unclear from our sources, those analyst growth forecasts we discussed earlier, the ones pointing towards potential upside, they do suggest that if the fundamental story holds up or improves, or if the energy market strengthens overall, there could be potential for upward price momentum over the longer run.
Yeah.
So even if the current chart isn't giving clear buy signals right now, the potential is there down the road. It kind of reinforces the idea this might be more suited to someone thinking longer term,
Yeah.
relying more on fundamentals or a sector recovery than short-term chart patterns.
That makes sense. Okay, let's broaden the view again. Beyond the numbers and the charts, what's the general feeling, the sentiment around Civitas Resources? Any potential triggers, catalysts that could move the stock? And importantly, what are the key risks we need to keep in mind?
Okay, so stepping back. Analyst sentiment, as we touched on, is definitely mixed. It leans overall towards caution. The consensus rating is actually hold. If you break it down, out of 15 analysts we saw data for, there was 1 sell, 8 holds, 6 buys, and just 1 strong buy.
So, mostly on the sidelines.
Pretty much. A real wait-and-see vibe from the majority. And what's really telling, I think, is that some of those analysts have cut their price targets quite substantially. We saw mentions of targets being lowered from previous highs, maybe near $80, down to the current averages, which are closer to $42. That's a big adjustment downwards.
Yeah, that's a significant shift in expectations. Did we see anything about, say, insider trading, or execs buying or selling, or any buzz on social media?
No, our sources didn't cover insider activity, buying or selling by company insiders, nor did they have any broad social media sentiment metrics. Those could definitely add more color to the picture, understanding management's confidence or the general public mood, but we don't have that info here.
Okay. What about things on the horizon? Any specific company events like product launches, M&A deals, earnings dates, that could act as a catalyst?
Nothing specific was mentioned in terms of, like, company-driven catalysts. No big project announcements or deals highlighted. Earnings reports are obviously coming up, as they always do. We didn't get exact dates. However, for a company like this, in this sector, the big catalysts are often external, right? Macro factors.
Ah, right, like oil prices?
Exactly. Big swings in commodity prices, oil, natural gas, those can move the stock significantly. Same with major geopolitical events that affect energy supply or demand, or, new government regulations impacting the energy industry. Those are the big, unpredictable potential catalysts.
So less about what the company announces next week and more about global events or policy shifts.
Very much so for this sector. Those external factors can be really powerful drivers.
Okay, so given those potential external shocks, what are the main risks an investor should really focus on with Civitas Resources?
Well, the key risks seem pretty clear from the discussion. First, obviously, that recent revenue decline we started with. That signals ongoing challenges, either in their operations or just the broader market environment. Second, and this is huge for the whole sector, is commodity price volatility. Energy markets can swing wildly based on global stuff, geopolitics.
Right.
It can cause big stock price moves that have little to do with the company's day-to-day operations.
Right, sector risk.
Definitely. Then there's regulatory risk. New environmental rules, changes to extraction policies, those can hit costs or future plans hard. And finally, maybe a bit more subtle, but given its mid-cap size, that $2.87 billion market cap, you might infer some moderate liquidity risk. And just generally, energy stocks can be highly volatile. Expect potential for big price swings.
So if we tie all that back to you, the listener, it really sounds like investing here isn't just about Civitas Resources itself. It's also making a call on the whole energy sector and global factors, right?
Wow. Absolutely. That's a great way to summarize it. An investment here is partly a bet on the company's execution, sure, but it's also significantly influenced by where you think energy prices are going, what global stability looks like, and the regulatory environment. The mixed analyst views, those target downgrades, they really underscore that the market sees both potential rewards and significant headwinds. Understanding and being comfortable with those external forces is really critical for managing your expectations and your risk.
Okay, great perspective. So let's bring it all home. We've looked at fundamentals, valuation, technicals, sentiment, risks. What does this all boil down to for someone considering Civitas Resources right now? Let's get to the summary recommendation.
Okay, so synthesizing all that analysis, the overall rating we derived comes out at 6.5 out of 10. And that rating really reflects those mixed signals we found, right?
Yeah.
The revenue decline versus the strong EPS. The moderate valuation picture, partly due to missing data, and that cautious hold consensus from analysts.
6.5 out of 10. So some positives, but definitely not a slam dunk. What about that upside potential you mentioned earlier?
Yes, the potential is definitely there, according to those analyst forecasts, some of which are quite high. But, and it's a big but, it's crucial to remember that this upside comes bundled with significant risks. Sector risks, company risks.
Yeah.
You, as the investor, really need to be aware of those and okay with them.
And if someone decides they are comfortable with the risks and wants to potentially take a position, what's a sensible entry price range to think about?
Well, the analysis suggests considering entry maybe around the current levels, which were about $30 to $32, or potentially on dips if the price pulls back closer to the $28 to $30 range. That factors in the volatility we've talked about and the general risk profile.
Okay. And who is this type of investment really best suited for? Is it for quick traders or more for the patient investor?
This seems definitely more suitable for long-term investors, people who have a higher tolerance for those sector ups and downs, and importantly, people who are patient enough to potentially wait for a recovery in commodity prices or for clearer signs of operational improvement from the company itself.
So, not for the faint of heart or someone looking for a quick buck.
Probably not ideal, no. Short-term traders should likely be pretty cautious here, given the volatility and the mixed signals. Now, if they have access to detailed technical charts and are actively monitoring them, maybe they could find short-term trading opportunities around support and resistance levels, but that's beyond the scope of our current data.
Understood. And finally, for planning purposes, stop losses and take profit targets. Any guidelines there?
Yes, some suggestions were provided. For stop loss, consider setting it maybe 8% to 10% below your entry point. So for example, if you get in at $30, maybe a stop around $27.50 could help limit your potential downside if things go south unexpectedly.
Okay, protects the downside.
Right. When we're taking profits, initial targets might be set near the median analyst forecast, that $42 to $48 range we mentioned. Of course, there's always the possibility of higher gains if those really bullish forecasts, the ones over $80, actually materialize down the line, but those are obviously less certain. And look, it's really, really important to stress this. This whole analysis is based on the specific forecasts and data available now. For a truly informed decision, you absolutely should review the latest official quarterly financial filings directly from Civitas Resources and do your own broader check on the energy sector's outlook. Always do your own homework.
That's crucial advice. So maybe a final thought for everyone listening. Given that Civitas Resources seems better suited for long-term investors who need patience for a potential recovery, the question for you becomes, what level of personal conviction and patience are you actually willing to commit? Especially when you're investing in a sector that's so exposed to unpredictable global shifts. It's really about matching the investment not just to the analysis, but to your own temperament and timeline, isn't it? Well, that's all the time we have for today's discussion. Thank you so much for tuning in to Investing Talk podcast. We hope you found this valuable, and we look forward to having you join us for our next breakdown.